Hello everyone, this is me CA Juraj. Welcome back to another video. Today I'll be doing a comprehensive analysis of Section 34 of the CGST Act 2017. Section 34 deals with credit notes and debit notes in GST. We all know what is credit note and debit note in the financial accounting perspective, as well as we understood in VAT laws, VAT laws. But in GST, which is different from what we have understood, that is credit note and debit note is something different from what we have understood in the financial accounting system. So I'll be doing an analysis of this section, and I'll be covering what is credit note, what is debit note, when to issue a credit note, what is the time limit to issue a credit note, and who can issue a credit note, etc. So we will move to credit note first. Credit note is something which is issued by the supplier. First and foremost thing we should understand is, in GST, supplier is the only person who can issue credit note and debit note. Earlier in VAT laws, we have issued, the supplier also issue credit note, and the purchasing party or the recipient issue a debit note to return the goods, etc. But in GST, what happens is only the supplier is able to make a credit note. The recipient need not issue a credit note or debit note for the goods returned, etc. So first thing we should understand is, debit note or credit note, whatever it is issued by the supplier only. The recipient has no right to issue debit note or credit note. First point is clear. Then, what are the scenarios when a credit note or debit note can be issued? First, credit note can be issued in the following scenarios. First one is where the taxable value or tax charged in the invoice exceeds the taxable value or tax payable. What is that? I'll give you an example. I have a mobile phone. I'm a mobile phone seller. Okay. I sold a mobile phone worth rupees 10,000. The tax rate I have charged is 18%, that is 1,800. Okay, so total amount of supply is 11,800 rupees. In this case, actual tax rate was 12%, but I have charged 18%. That is extra, right? So I cannot charge 18% tax for mobiles. So now what can I do as a supplier? I can issue a credit note and reverse the tax which I have paid extra. Okay, so I have to issue a credit note for that 600 rupees extra paid, extra collected from the customer. Okay, so now I can issue a credit note for 600 rupees and reverse the tax extra paid. That is the example. And another example I can give you is, for 10,000 rupees mobile phone, I have charged 11,000 rupees and I have charged 12% tax. That is, tax rate is exactly same, but I have charged extra amount. 11,000 I have charged. That is 1,000 extra. To reduce that amount, also I can issue a credit note. Okay, so these are the scenarios: taxable value exceeded or tax exceeded from the actual taxable value or tax. The second case is where the goods supplied are returned by the recipient. This is a normal case. We call it sales return, right? In sales return, in the earlier VAT regime, what we have followed is the recipient or the person who is returning the goods will issue a debit note, and the person who sold the goods, okay, who original supplier, will issue a credit note. But in GST, what we do is only the supplier who sold the goods will issue a credit note to the recipient, and in turn, the recipient can return the goods. Then the third scenario is where the goods or services found to be deficient. And the fourth scenario, this is very important. Sometimes the supplier issue or supplier give post sale discount. Discount will be given at the time of sales, as well as discount will be given after the sales happened, right? So post sale discounts are of different types. Different types means target incentives, cash discounts. Cash discount means if you give payment early, you will get a discount. So there are different types of the different kinds of discount. So for that, the supplier will issue a credit note. Whether the supplier can reduce the tax already charged is a question. In this case, can the supplier reduce the tax if he gives discounts after the supply? After the supply? No. But to reduce the tax, he has to fulfill the following conditions. The conditions given in section 15, subsection 3, clause B. What are the conditions given in section 15, subsection 3, clause B? We will check it. The first condition is such discount is established in terms of an agreement entered into at or before the time of such supply, and specifically linked to the relevant invoices. That specifically linked to the relevant invoices is not relevant here because CGST Amendment Act 2018 amended and removed this particular point. So linking to the relevant invoice is not necessary. So first condition is such discount is established in terms of an agreement entered into at the time of supply or before the time of supply. That is very important. And one more condition is there, that is the input tax credit as is attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of the supply. Two conditions are there. One, there should be an agreement, and that agreement should be at the time of supply or before the time of supply. That agreement can be written in the invoice also. A mere writing in the invoice can be said to be an agreement. Okay, so in the invoice, for example, in the invoice it is written that if you achieve this turnover, I'll give you this much discount, 5%, say 5% discount. So that discount is eligible for the supplier to reduce his tax liability, and simultaneously he has to make sure that the supplier has to make sure that the recipient has reversed the input tax credit already availed by him. That is very important. The onus to prove that the recipient has reversed the input tax credit is with the supplier. Okay, if both the two conditions are satisfied, the supplier can reduce the tax liability for the discount given post supply. Hope you have understood. Now we will move to the next. Section 34 subsection 2 deals with time limit to issue a credit note or debit note. What is the time limit to issue a credit note or debit note is 1. September following the end of the financial year in which such supply was made, or date of furnishing annual return, whichever is earlier. Whichever happens first, that is the date of last date for issuing a credit note. Okay. Now, September following the end of the financial year in which such supply was made. We will check it out. For example, 2019, March month, I have raised an invoice. For that invoice, for that invoice, I have to make a credit note. I have to issue a credit note. I can issue credit note only up to 30th September 2019. Okay. Can I issue credit note in the October month? No, I cannot issue credit note in the October month. I can issue credit note only in the month of September, maximum September 30th. Okay, and it should be reflected in the return for the month of September. for the invoices issued in March or in the April 2018 to March 2019, last date to issue a credit note or credit note only. Okay, debit note, there is no time limit. Credit note is September 30th. And if the annual return is filed before September 30, say for example July 30th, I have filed annual return for July, March 2019, 2018 financial year, 18-19 financial year, annual return has been filed on 30th July. In this case, last date to issue a credit note with respect to transactions in the year 2018-19 is 30th July 2019, because 30th July, on 30th July I have filed my annual return. That should be kept in mind. Now there is an important circular number 72 bar 46 2018, which clarifies or which gives a benefit to the medicine or pharmaceutical industry. In pharmaceutical industry, generally goods for drugs or medicines are time expiring goods, right? That medicine will get expired in a specific time, right? So to avoid difficulties faced by the medicine industry, government has brought in a circular and given some relaxation. Government has said that you can follow two options. Two options you can follow. Either of the two options you have to follow. One option is treat that time expired goods as a fresh supply. The second option is go for a regular credit note. Credit note and treat it as a fresh supply. If you treat it as a fresh supply, the recipient has to issue an invoice to the supplier. Generally, medicine manufacturer, distributor and retailer will be the players. Okay, and in this case distributor sold some goods to the retailer. Retailer, on expiring that goods, on that medicine or drugs, whatever it is, he want to return the goods. But month is over. September month is over. Can he return the goods? He can return the goods. But the supplier will be able to reverse the tax? No. If after September, he cannot reverse the tax. But to avoid that problem, government introduced this circular number 72 bar 46. In this circular, the first option is given. He can treat it as a fresh supply. So in this case, the retailer can issue an invoice to the distributor, so that retailer can charge tax on that particular medicine, and the distributor can take input tax credit also. That is the benefit available in this circular, in this option, if you follow this option. And the second thing is, if the retailer is not a registered person or he is a composition person, whether he is able to make an invoice and collect tax from the distributor? No, he cannot do that. In this case, what he can do is only one thing is, he can issue a bill of supply to the distributor, and tax he has to pay. This retailer has to pay. And the third case is, if the retailer is not at all registered in the GST law, he can return the goods by issuing a commercial invoice. Okay, that is over. The second option is regular normal option. Give a credit note by the supplier and recipient can return the goods. But what if the time limit is expired? September month is over. What can the supplier do? Can he reverse the tax? No, he cannot. He cannot reverse the tax already charged. Now let us see what happens after the September month. After September, the retailer returned the goods, time expired goods, to the distributor. In this case, what happens is distributor, this retailer has to reverse the input tax credit already availed, because this goods he is not using for his business purpose, right? So he has to return the goods as well as he has to reverse the input tax credit already availed. Then this distributor, can he avail that credit, or can he reverse that output tax already paid? No, he cannot reverse also. That is very important circular issued by the government. Okay, now let us move to the debit note part. What is debit note? We all know that, and scenarios where debit notes are issued. Let us see that. One, taxable value or tax charged in the invoice is less than taxable value or tax payable. Okay, we'll see what it is. Taxable value or tax charged is less than taxable value or tax payable. For example, 10,000 rupees worth mobile phone has been sold for 9,000 rupees and tax charged at the rate of 12%. What is exact tax? But in this case, 1,000 is less charged, right? Taxable value is only 9,000 he has charged, but actual he should have been charging 10,000 rupees. This case, to add that value, he can issue a debit note. The supplier can issue a debit note and collect the extra amount from the customer. Likewise, many other cases also, maybe tax rate charged is different. 18% goods, for 18% goods I have charged only 12%. In that case also, I can issue a debit note and collect the extra tax. Okay, collect that extra tax that is to be collected from the customer. And in this case, interestingly, in debit note, what is the time limit to issue a debit note? Earlier in credit note, what I have said is 30th of the September or annual return, whichever is earlier is the time limit for it to issue credit note, I have said. But in debit note, there is no such time limits, you should understand. Interestingly, this is revenue for the government, revenue for the department, so they have not given a time limit. Anytime you can issue a debit note and pay tax to the government, right? Okay. Now some examples for debit notes and credit notes. Upward or downward price revision, sales return I have already said, various post sales discount I have said 15, section 15 subsection 3 clause B, and I have also said wrong tax rate charge. For the 18% tax I have said 12% charge. For that to cover up that 6% I can issue a debit note, right? So that is also said. Then a format of debit note and credit note. What is a format? Rule 53 speaks about format of credit note and debit note. But in Rule 53, there is no specific format given. But there are some information which is to be contained in, which is to be included in debit note or credit note. That is supplier name, address, GST number, consecutive serial number, taxable value, tax amount, signature, etc. Like invoice, whatever the details required in the invoice, that should be in the credit note or debit note also. Then CGST Amendment Act 2018 given some one amendment. Earlier it was required to link to a specific invoice. If you want to issue a credit note or debit note, you have to link that credit note or debit note to the specific invoice. But in after amendment brought in some changes and said that a single credit note or debit note can be issued for multiple invoices also. That is a fairly good amendment brought in by the department. Then what is financial credit note and debit note? That is very important to understand here. I would say in common man's language, credit note reducing the value of original supply without reducing tax attributable to it. What it is? Credit note taxable value is decreased, reduced, but tax has no effect. This is what financial credit note. Okay, if tax has affected, then GST credit note is to be issued. Another circular clarified that this financial credit note need not be reported in the GST returns. Okay, in GSTR 1 we have to report credit note issued, but if you issue a financial credit note, that is not required to be reported in the GSTR 1. Okay. Now, some situations of issuing financial credit note is discount offered post supply. I have said some conditions in section 15, but if that condition is not satisfied, the supplier cannot reverse the tax already paid, right? In that case, that condition is not met, then he can issue a financial credit note and give discount. There is no tax effect. Okay, then second one is credit note on relation to exempt, nil rated and non GST supplies. The third case is after the expiry of specific time limit. After September month, credit note cannot be issued. If they issue a credit note, they can issue a financial credit note that has no effect on the tax amount. If it has tax effect, it should be issued before September. So after September, if you issue a credit note, then that is only a financial credit note. And refund of consideration where tax is not refunded. That is also another case. Then financial credit note, some practical issues are there. Section 16.2 deals with read with rule 37 says that if the recipient has not paid the consideration to the supplier within 180 days, he has to reverse the input tax credit he has already availed, right? Section 16 subsection 2 read with rule 37 says it very clearly that if you have not paid your consideration to the supplier within 180 days, you have to reverse the input tax credit already availed. But if you issue a financial credit note, actually discount is given by the supplier and recipient's liability get reduced. Say for example, I have to pay to my supplier rupees 1 lakh. My supplier is giving 10,000 discount without affecting tax. That is financial credit note. So in turn, I have to pay the balance amount of 90,000 only. That 10,000 is adjusted by way of discount. Whether that amounts to payment of consideration or not, that is a question. Whether that 10,000 is affected by section 16 to read with rule 37, 180 days payment. No, that is payment. What is intended is refer to settlement of invoices only. If it is actually paid or if it is by way of discount also, that it will be treated as payment, right? So that rule 16 section 16 subsection 2 read with rule 37 will not get affected here, so we can move ahead. With that, I think you have got an insight on credit note and debit note. Hope everyone is clear. If you have any doubts, any clarification is required, you can freely ask in the comment box. Thank you so much for watching. Thank you. Have a nice day.